This is Friday, January 30th, 2026. Silver just crashed from $121 to $95 an hour. $26 erased. Gold fell from $5,600 to $4,950. $650 gone. And right now, at this exact moment, you cannot buy physical silver anywhere on Earth. Not at any price. The Perth Mint suspended sales. The U.S. Mint suspended sales. The Royal Mint is empty. Indian dealers are defaulting. Costco has purchase limits on silver. Read that again. The price crashed 22%, but you cannot buy the product. Does that sound like a real market to you? In every legitimate market in human history, when price crashes, supply floods in, sellers appear, product becomes available. That is how supply and demand works. That is basic economics. But here, the price collapses while the metal vanishes. The number goes down while the shelves go empty. This is not a market anymore. This is a magic trick. And I am about to show you exactly how the trick works. What you're watching right now has happened 3 times in recorded history. 3 times. Same pattern, same sequence, same outcome. And every single time, it destroyed an empire. Not damaged it, destroyed it. Completely, permanently. This is not speculation. This is pattern recognition. And once you see the pattern, you cannot unsee it. Rome, peak of power, 117 AD, controlling the entire Mediterranean. Most powerful military the world had ever seen. Roads, aqueducts, engineering marvels. Then they did something that seemed harmless at the time. They started diluting their currency. The denarius was Rome's silver coin, the backbone of their economy. At its peak, it was 95% pure silver, then 90%, then 80%, then 70%. By the year 200 AD, it was only 5% silver, 95% base metal. The government told citizens it was still worth the same. They passed laws making it illegal to refuse the debased coins. Price controls were enacted. Anyone caught charging more for goods faced execution. The result? Hyperinflation, food shortages. Trade collapsed because foreign merchants refused Roman coins. The military could not be paid. Legions mutinied. Borders collapsed. Barbarians poured in. By 476 AD, Rome was gone. Not weakened. Gone. Erased from history. The pattern? Debase the currency, lose trust, lose everything. Verified. The Dutch. 17th century. The Dutch Golden Age. Amsterdam was the financial capital of the world. The Dutch East India Company was the most valuable corporation in history, worth $9 trillion in today's money. The guilder was trusted everywhere. Dutch ships controlled global trade routes. Then came the wars. War with England, war with France, war with Spain. Wars cost money, massive amounts of money, so the Dutch government borrowed, and borrowed, and borrowed more. They issued bonds, they raised taxes, they debased coinage. By the 1780s, Dutch debt was unsustainable. Foreign creditors stopped lending. The guilder collapsed. Trade routes were seized by Britain. The Bank of Amsterdam, which had stood for nearly 200 years, failed in 1820. The entire financial system imploded. The Dutch went from global superpower to regional irrelevance in 1 generation. The pattern? Unpayable debt, currency collapse, empire over, verified. Britain, early 20th century, the British Empire. The sun never set on British territory. 1/4 of the world's population under British rule. The pound sterling was the global reserve currency for over a century. If you wanted to do international trade, you used pounds. London was the center of global finance. Then came World War I. Unimaginable cost. Britain borrowed heavily from the United States to finance the war. Then World War II. Even more borrowing. By 1945, Britain was the world's largest debtor nation. The empire was bankrupt. In 1944, the Bretton Woods Agreement was signed. The US dollar, not the pound, became the world's reserve currency. Britain was forced to devalue the pound in 1949, then again in 1967. By the 1970s, Britain was taking loans from the International Monetary Fund just to function. The empire was dismantled piece by piece. India, Africa, Asia, all gone. From global superpower to struggling island nation in 30 years. The pattern? Lose reserve currency status, lose empire. Check. 3 empires. 3 collapses. Same pattern every time. First, currency debasement or unsustainable debt. Second, loss of trust in the currency. Third, collapse of trade and economic power. Fourth, political and military collapse. Fifth, complete loss of global status. Not decline, collapse. The timeline varies, but the sequence never changes. Mathematical certainty, not opinion, pattern recognition. And right now, in January 2026, the United States and the Western financial system are in stage 3 of this exact pattern. Let me show you the numbers because numbers do not lie. The U.S. national debt is $36 trillion. $36 trillion. That number is so large it has lost meaning. Let me put it in perspective. The U.S. economy, The entire GDP is roughly $28 trillion per year. The debt is now 129% of GDP. That ratio has only been this high once before in American history, after World War II. But here's the difference. After World War II, America was the only major industrial power left standing. Europe was rubble. Asia was devastated. America had no competition. The manufacturing base was intact. The population was young and growing. Debt could be grown out of. Today, America faces competition from China, Europe, and emerging markets. The manufacturing base has been hollowed out. The population is aging. There's no growth miracle coming to save us this time. And it gets worse. Interest payments on that debt are now over $1 trillion per year. $1 trillion just on interest. That is more than the defense budget, more than Medicare. The government is borrowing money just to pay interest on previous borrowing. That is the definition of a debt spiral. Once you're in it, there are only two ways out. Default or inflate. Those are the only two options. Default means the government admits it cannot pay and bondholders lose everything. That destroys the currency instantly. Inflation means printing money to pay debts, which also destroys the currency, just more slowly. Either way, the currency dies. Mathematical certainty. But the debt is only part of the story. Let me tell you what is happening in the banking system right now, because this is the part nobody is talking about. In March 2023, Silicon Valley Bank collapsed, then Signature Bank, then First Republic. The 16th, 29th, and 14th largest bank failures in U.S. history happened within weeks of each other. The government and media told you it was contained. They told you the system was safe. They lied. Right now, today, hundreds of regional banks in America are holding commercial real estate loans that are underwater. Office buildings are empty because of remote work. Nobody wants office space anymore. Property values have collapsed. Banks are holding loans on buildings worth half what they were in 2019. Those loans are not being marked to market. They are being held at fantasy valuations on bank balance sheets. This is the same trick that collapsed the system in 2008. Pretend the assets are worth more than they are and hope nobody notices. But people are noticing. Look at the data. Bank deposits have been declining since early 2022. Where's that money going? Stocks, gold, Bitcoin, real estate, anything but cash in banks. The smart money is leaving, and when deposit flight accelerates, banks fail. Not might fail, will fail. Now, let me connect this to silver because this is where it gets truly insane. Silver crashed 22% this week, one of the largest weekly drops in years. The media will tell you it is because of profit-taking or technical selling or risk-off sentiment. That is all noise. Let me show you what actually happened. The selling occurred almost entirely during U.S. trading hours, not Asian hours, not European hours, U.S. hours. When New York opens, silver dumps. Red candles, aggressive selling. When New York closes, silver stabilizes. Sometimes it even rallies during Asian hours. Then New York opens again, and the dumping resumes. This happened every single day this week. It is not random, it is coordinated. Someone with enormous capital and access to the futures market is intentionally crashing the paper price of silver. They are flooding the COMEX with sell orders, hundreds of millions of ounces of paper silver contracts. Not real silver, paper promises, digital contracts. They are creating supply out of nothing with keystrokes and mouse clicks. And because the paper market is where the price is set, that fake supply crashes the real price. But here's where it gets really interesting. While American institutions are dumping paper silver, the rest of the world is buying physical metal. Let me show you the evidence. The Shanghai Futures Exchange. China. I have the data from January 30th, today. The SHF silver vaults currently hold 455 metric tons of silver. That is 14.6 million ounces. In one single day, January 30th, 26.94 metric tons were removed from those vaults, almost 27 tons in 24 hours. That is 870,000 ounces drained from one exchange in one day. At this rate, the Shanghai vaults will be completely empty in less than 3 weeks. Let that sink in. China is draining their silver vaults at an accelerating pace while the paper price crashes. And China has already done something even more revealing. They classified silver as a strategic national security resource. Silver exports from China are now restricted. No silver leaves China. They are treating silver the same way they treat rare earth elements and semiconductor materials. Resources critical to military and technological power. China is not selling silver. China is hoarding it. And they are doing this while Western banks are crashing the paper price. Now let me show you what is happening to physical supply around the world, because this is the part that proves the market is broken. The Perth Mint in Australia, one of the largest and most respected sovereign mints on Earth. On Thursday morning, before the crash even started, they sent a notice to wholesale distributors. I have seen this notice. It says, due to increasing worldwide demand for silver bullion products, we have a large backlog of orders for the 2026 Kangaroo 1-ounce silver coin. As a result, we have decided to pause taking wholesale orders from today until February 23rd to clear back orders. Read that again. Increasing worldwide demand, large backlog, pause orders until February 23rd. That is almost a full month. They also announced monthly allocations to ensure all regions receive stock. Allocations. That is rationing. That is what you do during a shortage. This notice was sent when silver was still at $117, before the crash, when everything looked fine. Australia is one of the largest silver-producing nations on Earth, and their government mint cannot get enough silver to meet demand. Then the paper price crashed to $95. What do you think happened next? Every smart investor on the planet just saw a 22% discount on an asset that mints cannot keep in stock. They bought everything they could find. The crash did not reduce demand. It created a tsunami of new buying. The United States Mint suspended all sales of silver numismatic products. Products show as temporarily unavailable on their website. When customers call, they are told the mint is updating prices. But here's what actually happened. Silver prices moved so fast that the mint could not keep up. They were selling American Silver Eagles at $91 when spot went above 90. They were losing money on every single sale, so they stopped. They shut down completely. When sales resumed, the 2026 American Silver Eagle was priced at $169, an 86% price increase overnight. The official mint of the United States government just repriced silver up 86%, while the paper market says the price crashed. Does that make sense? The 2026 Silver Eagle that was supposed to release in January has been delayed to late February. Subscriptions are already sold out before the coin even exists. The Royal Mint in Britain, out of stock on silver bars. Even 1 kilogram bars, the most basic common format, gone. India. Dealers are not just out of stock. They are defaulting on deliveries. That means they took orders, accepted payment, and then failed to deliver the product. People paid money and received nothing. Amazon India sellers are canceling orders after payment has been processed. This is not a supply hiccup. This is a breakdown of the delivery system. Costco. Yes, the wholesale retailer where you buy toilet paper in bulk. They sell silver bullion. And now they have implemented purchase limits. You cannot buy as much as you want anymore. Costco is rationing silver. A store known for selling everything in bulk is limiting how much silver you can purchase. Why? Because demand is overwhelming supply. When major sovereign mints across multiple continents are all experiencing the same crisis at the exact same time, that is not coincidence. That is systemic breakdown. Now let me show you the lease rates because this is the smoking gun. Lease rates are what it costs to borrow physical silver. In normal markets, lease rates are near zero, around 0.3 to 0.5%, basically free. Right now, silver lease rates have exploded. Some reports show 8%, others show rates as high as 39%. 39% to borrow silver for a short period. That is a panic signal. That means physical silver is so scarce that holders are demanding massive premiums just to temporarily lend it out. When you see lease rates spike like this, it means one thing. There is not enough real metal to go around. The physical market is broken. The system is failing. Let me explain what this means in simple terms. There are two silver markets, the paper market and the physical market. The paper market is COMEX, futures contracts, ETFs, derivatives, digital silver. This is where billions of dollars trade every single day. But almost none of it is real silver. It is just contracts, promises, bets. Most of these contracts never result in physical delivery. They are just financial instruments. Casino chips. The second market is the physical market. Real metal. Coins you can hold, bars you can stack, actual silver that exists in the real world. These two markets are supposed to be connected. The paper price is supposed to reflect the value of physical metal. But right now, they are completely disconnected. The link is broken. The paper market says silver is $95. The physical market says you cannot have any at any price. One of these is lying. Which one do you believe? The computer screen or the empty vault? Let me give you historical context because this has happened before. In 1979 and 1980, during the Hunt Brothers silver squeeze, similar dynamics played out. Paper and physical disconnected. Dealers ran out of inventory. Premiums exploded. People could not find silver to buy even as the price was moving. The paper market said one price. The physical market said something completely different. Eventually, the paper price had to catch up to reality. Silver went from $6 to $50 in months. An 800% move. One of the greatest commodity rallies in history. I'm not saying that exact scenario repeats, but the fundamental dynamic is the same. When physical supply cannot meet physical demand, price must adjust. The paper market can manipulate. It can suppress. It can create artificial crashes like we saw this week, but it cannot create physical silver. It cannot mine it. It cannot manufacture it from nothing. Paper manipulation can delay the inevitable. It cannot prevent it. At some point, physical reality wins. It always does. Let me show you the bigger picture, because what happened this week did not start this week. Silver has been in a supply deficit for 5 consecutive years. 5 years. Every year since 2021, global demand has exceeded global supply. Let me break that down. The world mines approximately 835 million ounces of silver per year. That is total global production. But the world consumes over 1 billion ounces per year. Industrial demand for solar panels, electronics, electric vehicles, 5G infrastructure, medical devices, water purification. Investment demand for coins, bars, ETFs, jewelry, and silverware. Total demand exceeds total supply by hundreds of millions of ounces every single year. The cumulative deficit over 5 years is over 800 million ounces. 800 million ounces where demand exceeded supply. Where did that extra silver come from? It came from above-ground stockpiles, vaults, inventories, reserves built up over previous decades. Think of it like a bathtub. Mine supply is water coming in from the faucet. Demand is water draining out. For 5 years, more water is drained out than come in. The bathtub is emptying, and now those stockpiles are nearly gone. The Shanghai vaults are at critical levels. COMEX registered silver has been declining for years. The buffer is depleted. There's no emergency reserve left to tap into. And now, with mints suspending sales and dealers defaulting, we are seeing the consequences of 5 years of deficits finally catching up. This is not short-term noise. This is structural collapse. Let me tell you what I think happens next. We are entering a new phase where paper and physical completely diverge. The paper price may continue to be volatile. It may crash. It may spike. It will be manipulated as long as the paper market exists. But physical silver will become increasingly impossible to obtain. Premiums will explode. Availability will vanish. Eventually, you will not be able to buy physical silver at the paper price. Period. This is already happening. Japan is seeing 60% premiums over spot. Dubai is seeing 40% premiums. The paper price says 95. But if you want actual metal delivered to your door, you pay 120, 130, higher. The disconnect is widening every single day. Now let me tell you what this means for you, because understanding the situation is useless if you do not know how to act. If you are holding physical silver, do not panic. Do not let the paper price scare you. Look at reality. Mints are shutting down. Dealers are defaulting. China is hoarding. Vaults are draining. Lease rates are exploding. And you are holding the one thing the entire world is scrambling to get. The paper price is noise. It is manipulation. It is a magic trick designed to shake you out of your position. Your physical metal is worth what someone will actually pay in the real world. Right now, that is far more than $95. Hold your metal. Do not be the fool who sells at the bottom. If you are holding paper silver, ETFs, futures contracts, unallocated accounts, ask yourself one question. If everyone demanded delivery tomorrow, could your counterparty actually deliver the metal? The answer is no. There is not enough. You do not own silver. You own a promise, and promises break. Let me show you what currency collapse actually looks like for normal people, because this is not theoretical. This is not abstract economics. This is real. When a currency loses trust, here's what happens. First, prices start rising faster than wages. You notice groceries cost more, gas costs more, rent costs more, but your paycheck stays the same. You feel poorer, but you do not understand why. Second, shortages begin. Certain products become hard to find. Not everything, just key items, then more items, then entire categories vanish from shelves. Third, people start hoarding. Not crazy people, normal people. They see prices rising and shortages spreading, so they buy extra whenever they can. This accelerates the shortages. Fourth, alternative currencies emerge. People stop trusting the official money. They start trading in other things. Foreign currency, gold, silver, cigarettes. Anything that holds value better than paper. Fifth, the government panics. They implement price controls. They make hoarding illegal. They declare certain transactions forbidden. They threaten penalties for refusing the official currency. These measures never work. They only accelerate the collapse. Sixth, the system breaks. ATMs run out of cash. Banks limit withdrawals. Payments stop processing. Paychecks do not clear. Everything grinds to a halt. Seventh, chaos. This is when food riots start, when crime explodes, when governments fall. This is not hypothetical. This is the pattern. Venezuela, Zimbabwe, Argentina, Weimar Germany. It is happening right now in Lebanon and Turkey. Same pattern, same sequence. And it is coming to the West, not might come, will come. We are not at the edge of the cliff. We have already walked off. We just have not hit the ground yet. Here is what you need to understand. What is happening to silver right now is not about silver. It is about trust. It is about the death of paper money. It is about the greatest wealth transfer in history. When currencies collapse, wealth does not disappear. It transfers. It moves from people holding paper to people holding real assets. Cash becomes worthless. Bonds become worthless. Savings accounts become worthless. But gold stays gold. Silver stays silver. Land stays land. The people who understand this before it happens will preserve their wealth. The people who do not will lose everything. This is not fear-mongering. This is history. It has happened dozens of times before. It is happening again right now. The only question is whether you position yourself on the right side of it. 3 empires. Same pattern, same outcome. Rome debased currency and collapsed. The Dutch borrowed too much and collapsed. Britain lost reserve status and collapsed. The United States is $36 trillion in debt with a collapsing banking system and a dying currency. The pattern is screaming at us. The smart money is already moving. China is draining vaults. Middle Eastern sovereign wealth funds are accumulating physical gold and silver. Central banks around the world bought more gold in 2023 and 2024 than any time in history. They see what is coming. They are preparing. While Western institutions dump paper, Eastern buyers accumulate metal. One side is playing a video game. The other side is taking home the prize. Which side are you on? This is not a real market anymore. Markets require price discovery. Markets require supply and demand to set prices. What we have now is manipulation, distortion, and lies. The price crashes while the product vanishes. That is not a market. That is a magic trick. And now you know how the trick works. They sell paper to create fake supply. They crash the price to shake out weak hands. And while everyone is panicking, they accumulate physical metal at discount prices. This is the largest transfer of wealth from the ignorant to the informed in modern history. And it is happening right now, today, in real time. You get to decide which side you are on. You can believe the paper price and sell your metal in fear. Or you can look at the empty vaults and understand what is really happening. The choice is yours. But understand this. You cannot unsee this. You cannot go back to believing the official story. The evidence is overwhelming. The pattern is clear. This is not opinion. This is pattern recognition. And the pattern says we are in the final stages of currency collapse. Same pattern, same sequence, same outcome, mathematical certainty. Not might happen, will happen.